before going to start the today's session, as we have discussed up in the last session, we have completed the cash management and as well as the liquidity management. So before going to start today, the new topic is the treasury and risk management. Before going to jump into that, so any further queries on last week discussion? If any queries, please let me know.
No, sir, nothing from my side.
Venki, what about you?
No queries, sir.
Okay. Okay, fine. No problem. So, okay. So today we are going to start the new concept, which is a treasury. Treasury and risk management. So many peoples are thinking about treasury and risk management. Both are the same, but both are the differ. Treasury, the concept of treasury is differ, as well as the risk management is a differ. So now let us talk about the treasury. So in many decades, the term treasury, only the particular peoples were using as a treasurer, but now the perception has been changed. So in recent days, because in previous days, whoever is going to accommodate the money for working capital, I mean, wherever the loans, wherever the debts are required, I mean, wherever the borrowings, wherever the investments were required, only in that situation, the treasurer was come into picture. But now the perception has been changed in current decades. So what has happened here? So the treasury, the person, he is going to play the key role in every business organization nowadays, because in olden days, as I mentioned, there was only the person was able to playing the wherever the borrowings, wherever the investments were required. But wherever the working capital was not sufficient, if they would require anything, then the treasurer was come into picture. But now the perception has been changed, as I mentioned. Now we are going to talk about, then with this treasury, what we are going to learn. So the first thing is that we are going to learn is a corporate treasury. So the term when I mention as a corporate term, as a corporate treasury, why the term which I have mentioned is a corporate treasury. So what is the difference between normal treasury and as well as corporate treasury? So the regular means, let's assume the treasury means many organizations, even let's assume in banks also, we are going to use term as a treasury, because they have some treasury separate department. RBI also has the treasury, so they have increased the yield rates, bond rates. So we are regularly we are hearing such kind of news. So even let's talk about the banks. Okay, so now completely the banks has the separate or their own dedicated software for the treasury activities in order to perform the, let's assume HDFC Bank or Kotak Mahindra Bank, because they are having different softwares or their own softwares. I don't think they are going to use SAP, because the reason being that they have fully dedicated system. They would require is a fully dedicated system where they want to monitor or where they want to build the like it's a equities purchases and as well as the some commodity purchases as well as the sales, commodity sales, and as well as the even mutual funds. So for all these activities, they would require is a separate system. But now that is a different system. Okay. So now when I talk about corporate treasury, the corporate treasury, which is the system where the particular organizations, particular manufacturing organizations will be implementing this corporate treasury functionalities. Because under corporate treasury, what are the activities will come into picture. So now, because we need to understand functionalities of corporate treasury. Functionalities of corporate treasury. One is a cash and liquidity management. Cash and liquidity management. The second one is a financial risk. We'll talk about one by one. Financial risk management. In this financial risk, foreign exchange risk, foreign exchange risk, interest rate risk, and as well as commodity price risk. Then the next one would be a working capital management. Working capital management. Then long-term funding. Then next one, tax and treasury accounting. Then company. Sorry. Credit rating management. Then the last one would be company capital structure. Now, in general, the treasury is going to perform. Not only the treasury, the corporate treasury is going to perform. These are the activities. So let's talk about the one by one. Cash and liquidity management. In previous sessions, we have seen practically how the cash and liquidity management is going to helps to organizations to analyze the cash inflows, cash outflows, and what is the current cash position of my bank accounts. So we have seen practically how this is going to do the analysis, because we have implemented the concept to call it as a electronic bank statement integration with the cash and liquidity management. So the moment when we receive the files, current day bank statements, we can able to upload those statements into the system based on the planning types of what we have defined. Then the system will populate what is the incoming, what is the outgoing, and what is my opening balance of that particular bank account, and what is the closing balance of that particular bank account. By using this functionality, by viewing all these results in Cash Flow Analyzer Fury app, then the cash manager will take a decision whether we do have sufficient funds in order to make the payments, in order to do the on-time payments to the vendors, or to make or on-time payments to where we borrowed long-term loans or short-term loans, I mean to repay the interests. So if we have the excess funds, also the management will take a decision. I mean the treasury manager or a cash manager will take a decision. So we do have excess funds, how we can utilize those funds in order to reduce the risk. So they want to increase their returns on the investments. Now this we have already seen practically. Now coming to the financial risk management. So there are two types of risks will be involving for each and every business organization. One is a operational risk, another one is a financial risk. But the treasury deals about the financial risk management. It will not deals about the operational risk. Now let's talk about the financial risk management. So under financial risk management, we have the three things here. One is a foreign exchange. One is a foreign exchange risk. Another one is a interest rate risk, commodity price risk. So now let's say foreign exchange risk. As I mentioned, my business organization is dealing business with multiple countries. Let's assume US, Singapore, Malaysia, Thailand, and with China. At this point of time, today, the moment when we sell the goods, or okay, let's assume when we sell the goods to the customers, today the exchange rate is something, then based on the terms of payment, when we receive payment from the customer, the exchange rate might be different. It will not be the same. So we are assuming that, let's say that some analysts, they are saying that today the exchange rate is something, maybe after 1 year, after 1 month, after 6 months, the exchange rate may go up due to some XYZ reasons. If that is the situation, how we are going to maximize, how we are going to handle that risk in order to foreign exchange transactions, how we are going to take care of that one? Because whether we can enter into some contracts now itself, because in order to, because in future we don't know what would be the rate which we will receive from the customer, because now, so that is the reason we have the corporate treasury is going to handle the foreign exchange risk. Because now let's say in order to mitigate this risk, foreign exchange risk, now we are entering into an agreement with the banks or some financial institutions with the spot rate. Then that spot rate will be until end of the, until end of the contract. The financial institution or the banks, they are going to supply that exchange rate until the end of the contract. There are different ways are there in order to mitigate the risk on foreign exchange transactions. Now let us talk about the interest risk, interest rate risks. In practical scenario, when pandemic has been started in 2019, in 2020, we have seen the banks were reduced drastically the interest rates on our investments. Now, let's assume our organization, we have invested in banks. At the same time, we do also have some of the working capital in the bank accounts. So now the banks has been drastically reduced the interest rates returns. Let's assume, so the 1st of January 2020 onwards, the banks were announced, let's say, the interest rates usually they were paying is a 6.7, some 7%. Now that got reduced from the 7% to 5%. If this is the case, how we are going to manage that interest rate risks? Because we have invested millions of rupees. Let's assume that most of the cases the organizations will invest millions of rupees, even they borrow the money also millions of rupees. Now they have increased, let's assume, so they have increased interest rates on the loans, let's say the long-term loans. At the same time, they also reduced interest rates on the investments. If this could be the situation, how we are going to handle that risk? Then the corporate treasury is going to support such functionalities where we need to enter into there are different kind of instruments, financial instruments are there. So we need to do the configuration all together. Then we can achieve this one. How we are going to handle that one. Now coming to the commodity price risk. The third one would be a commodity price risk. Let's assume a business organization is a manufacturing industry. So let's assume they are manufacturing some heaters and boilers. So in order to manufacture a heaters and boilers, they frequently the raw material copper should be required for them. Because as you know, when I mentioned the term is a commodity, means the price fluctuations will be, I mean, anytime it will be huge, the price fluctuations. Every minute, every second, the price fluctuations will be there. So now, let's say now today, if I place the order to buy the copper, what is the rate? Now let's assume some analysts are saying that the price may go up until end of the March. Let's assume. So today, let's say the 1 kg of the copper is let's assume 100 rupees, but until end of the March, it may go, it's a 120 rupees due to some reasons. If this is the case, then how to handle this one? How to handle the commodity price risks? So now whether we need to enter into an agreement now, then we need to continue that contract a certain point of time in order to control my commodity price risks. So these are the different risks which the corporate treasury is going to handle in SAP. Because don't think that the treasury will be obtaining functionalities only the trading organizations as well as investment organizations. Okay, there will be a situations even the corporate treasury functionalities may required for manufacturing industries also. Okay, not only for the trading organizations. Now let us come to the working capital management. The third one would be a, so the term when I would say working capital management, the cash manager or treasury department predominantly their job is that to have a sufficient funds in their organization in order to repay the loans or in order to repay the vendor payments, so or in order to repay the interests on borrowed loans, as well as to run the business organization. So they would require is a working capital management is a separate. I think even this is not the separate thing, then it's a part of the cash and liquidity management only. Because if by doing the analysis with the cash flow analyzer, we will come to know whether we do have sufficient funds, whether we do have the deficit funds. So obviously we will come to know based on that the treasury department will take a decisions immediately. Okay, in case if they have sufficient funds, then immediately they will call to the accounts payable, I mean AP team. Okay, how long does the funds does not required? Then they will take a decision whether we need to invest somewhere those funds, then or whether we need to keep the funds as idle. Okay, depends on the management decision. They will go for which one is feasible. Now, long-term funding. The option number 4 would be the activity. Long-term funding. Because most of the organizations, they don't have their own funds. Because now let's assume even in India, let us talk about. We have Tata, Reliance, there are, I mean, Mahindra and Mahindra, there are n number of business entities are there. So in general, to operate their business, they don't have their own funds. In order to get the funds, there are different ways are there. They might be raising equities, or they might be issuing some commercial papers, or they might be issuing some bonds. Okay, there are various sources are available. By them, they are accommodating the funding from the public. So now that based on based on that fund, I mean funds, they are going to operate their business. So now a long-term funding, okay, whether it should be from the long-term funding would be whether the organization is going to borrow from the public or borrow from the financial institutions. How we are going to handle that one? Then that for that functionality, the corporate treasury is going to support. Now, tax and treasury accounting. So the moment when I say that tax and treasury accounting, because whatever the transactions which are happening in treasury, for all those transactions, then the treasury is going to support even for tax related postings also, and as well as wherever the accounting has an impact, then the corporate treasury is going to support. Okay, let's assume the moment when we are importing the goods from let's assume we are importing copper from outside of the country. So at that point of time, there might be a customs duty involved. There might be some local taxes we have to pay. In such cases, there will have an impact on accounting. So in that situation also, the treasury is going to support in order to post that business transactions. Now coming to the next one would be a company credit rating management. When I say the company credit rating management in India, so you might have heard the CRISIL, CRSIL. So if you follow the Economic Times or business news, you may heard the news CRISIL has been increased. In India, there are two credit rating agencies are there. One is a CRISIL, but another one I don't remember. So what is the financial position of our organization and how the organization functions are being operated? Based on that, the credit rating agencies will give the rating. Now let's assume our organization will have the higher rating. Means like the simple logic, if I would say, if we have the good credit score, then obviously we will get, there could be a more and more chances to get the loan or some credit cards also. It's a less than the higher rate. I mean, lesser rate we can expect. If we have the bad credit score, definitely the banks are going to demand we must have to borrow the loan with higher and higher interest rate. The similar logic here also, corporate credit rating management system. So if our organization has the good rating, then the financial institutions will be offer or will charge the less interest rates on the borrowings. If our organization has less credit rating, low credit rating, due to that fact, there could be a chances the financial institutions to charge the more and more interest rates. This is one of the biggest drawback for every business organization. So that is the reason they must have to maintain the credit rating management. Now, for this functionality, the corporate treasury system is going to support. Now coming to the company capital structure. When I say the capital structure, now let's say in my business organization, we have the 100 millions of the capital. From that 100 millions, how we need to structurize the capital? Means what is the preference capital? What is the equity capital? What is the operating capital? And what is the surplus? What is the reserves? So we must have to plan that one. Means the corporate treasury function is going to support to structurize the capital also. Okay, to structure, without structurizing the capital, then we may not achieve the organization goals. So that is the reason this is also one of the function in the treasury. So now this is about the corporate treasury, the functionalities we have discussed. So is it clear for both of you? Yes, sir. Okay, fine. Now let me present that PPT. Now you can see here, this slide will give the complete structure of the treasury. Now in S4HANA treasury and risk management. Okay, you can see here the digital core treasury management. This is where we are standing. But now if you see all these outside of this SAP inbox, then we need to understand one by one. We need to understand that one by one. Now let us talk about this part is a very important for us. Now you can see here the SAP has been implemented trading platforms. First, you can see here the trading platforms. So the trading, when I would say the trading platforms, we have the different kind of applications are there. These are the third-party systems, Bloomberg, 360T, FXall, Thomson Reuters. So these are the third-party systems which we need to integrate with SAP systems. Means, let's say, if you want to do, or if you want to purchase a shares, or if you want to purchase a mutual funds, you must require you cannot directly buy from them. Now we would require is some third party application. Now let's assume in India we have the like Sharekhan, Zerodha, 5 Paisa. So different brokers are there. So now for them, they are not going to support to the SAP functionalities. But for them, in order to support to the SAP, then in order to support to that SAP, now we would require is a trading platform systems. Trading platforms integration is to be required. Means because what it does, the moment when we place the order in SAP system, let's assume if the order is relevant for the foreign exchange. In finance, the regular practice, what we would see, let's say the exchange rates today, once the markets will be closed, the closing exchange rates will be uploaded into the SAP system. Those exchange rates will be used for tomorrow's postings, tomorrow's all your business transactions postings purpose. But now the trading platforms will be integrated to the live exchange rate changes, because at this moment, what is my exchange rate? Because if you consider the yesterday's closing exchange rates and now the current running exchange rate, what is the current rate in the market? If you use the previous exchange rate, it will have impact on your treasury transactions. So these trading platforms will be integrated to your current market rates. Current means at this minute, at this second, what is the rate which is running in the market? For all such kind of transactions, these are the trading platforms will be supported. But going forward, we will see how this will be integrated. Now, we need to also understand that the second thing would be a market data. So in Treasury, whatever the business transactions we are dealing, all those transactions are dependent on market data. There is a separate component which is available, market data management in Treasury. When I say the market data, the moment when we are placing the orders, whether it could be a buy order or it could be a sell order, we must require either it could be exchange rate we may require, what is the exchange rate at this moment, or we may require interest rate also. What is the interest rate at this moment which is running in the market? So those real-time live rates will be updated through the interface system. So in order to update those interest rates and as well as the forex rates, either we can use Thomson Reuters or it's a Bloomberg. These, I mean, there are different kind of third-party systems are available, but predominantly most of the organizations will be using Bloomberg or Thomson Reuters. Now, these two things we must have to aware. So the rest all the things are quite common, and also the SAP is going to support to the SAP multi-bank connectivity functionality. This will be also part of the Treasury. Now, as we know, in finance, okay, we have the modules under finance. We have the modules is a general ledger accounting, accounts payable, accounts receivable, fixed asset accounting. In controlling also, we have the like cost center accounting, profit center accounting, POPA, and product costing. The similar way, the treasury also, it consists of the different sub-modules. So now, what are the sub-modules that Treasury it consists of? The Treasury, I mean, okay, the financial supply chain management, because the Treasury is a part of financial supply chain management, FSCM. Now, under the FSCM, the peoples are thinking that Treasury is a separate, Treasury and risk management will be separate, and FSCM is a separate. But absolutely that is wrong. Let's see. The FSCM has been divided into the two parts. Now, FSCM has been divided into the two parts. Let's see. Please go on mute. If you want to talk, you can unmute and you can talk. Now, let's say the part 1. FSCM part 1. So under FSCM part 1, what we are going to learn. Now, Treasury. Under Treasury again, we have a different modules like it's a money market, forex. I will show you that one. Okay, so now for okay, money market, forex, then derivatives, securities, then commodities. Sorry, not commodities, trade finance. So all these which we are going to learn under Treasury. Now, let us talk about the risk management. Because the risk management is a separate component, separate application, and Treasury is a separate. The risk management is going to support for market risk analyzer. Set one more thing, hedging also. Hedging. Then market risk analyzer. Then portfolio risk analyzer. Then credit risk analyzer. So now also it is going to support cash and liquidity management. Then also it is going to support to the IHC, in-house cash management. Then also it is going to support to the BCM functionalities, bank communication management. So now these are the functionalities, and also now so okay, so now these are the functionalities, the treasury and risk management which we will perform. Even there is a debt management, it is there. Debt management, then advanced payment management. So there are different functionalities which will be part of treasury, I mean the part 1. Now let us talk about the part 2. So now the part 2, which is going to support the part 2, the treasury part 2 is a number 1 is a credit management, then collections management, then the next one is a dispute management, then the last one is a biller directive. So finally, the financial FSCM module has been divided into the 2 subgroups. Now you can see here. This is the part 1. This is the part 2. Okay. So now this is the part 1. This is the part 2. So now is it clear? Now what we are going to, what SAP is going to support and how FSCM has been divided. Is it clear for all of you?
Yes.
Okay. Because without knowing all these things, then don't start anything. Okay. Because the many people are thinking that only treasury, okay, I want to learn only treasury. I want to learn only the credit management. Or some people will say that I want to learn FSCM and treasury. But FSCM itself, component itself, it has, these are the sub-components. Okay. Now, as we discussed, except this thing, we are going to see all other functionalities, because IHC in-house cash management, which we are not going to discuss our sessions. Except this one, we will see, or we are going to learn all other sub-components or other sub-modules. Now, so in order to learn or in order to gain the knowledge or gain some hands-on experience, what you people need to do? Please concentrate here. This is a very, very, very important one. Because you might have experience in FICO, or you might have experience in some other areas. But now Treasury is not a easy topic, and as I mentioned, it's a complicated one. And also we would require some domain, we would require some experience. The moment, because let's assume if you want to become a FICO consultant, you must have to aware what is the business process of finance and controlling. Let's say that if you have already studied MBA, BCom or MCom, CA, ICWA, those people can eligible, or they can able to understand easily how the entries are flowing, what are the accounting entries, what is the debit, what is credit. Now, if you want to understand clearly about the controlling module, where the cost accountants will pitch into that one, then they can understand easily the business process of the controlling. But now the concept of the treasury in every business organization, if in the treasury department, they might have CIF. It's a financial analysts will be there. So they are the experts. So they are going to play the key role in the treasury. So that is the reason. So please try to start watching the either market news, what is going on, what is the exchange rate which is there at this moment today. Okay, what is the RBI is going to announcing, let's say that they have increased some 25 basis points. You might have heard about this such kind of news, but what will be the impact? Because of that impact, there will be an impact on the, let's say, the long-term loans. What are the long-term loans? Either it could be a corporate loans, or it could be home loans, or it could be a personal loans, or it could be a vehicle loans. How much percentage the RBI is going to increase? So that is the reason I would request you people, please monitor or please watch the news, business news continuously. I would suggest two websites. Either you can watch is Economic Times, or you can watch Money Control. Okay, those two websites will give the fruitful information just for awareness only. Don't do anything. Okay, it's up to you whether you can. But if you watch them regularly, then definitely you will get some fair idea. Okay, this is my suggestion only. And also, as I mentioned, it is not that much easy to understand the subject. You need to have a lot of patience, a lot of concentration before going to start the subject. Because you might have heard some are the product types. Let's say the fixed term deposit. Because in regular scenario, you might have heard where we can approach to the bank, then bank will offer so and so rate. Then on our investments, the bank is going to return the interest. That is the regular practice. That is the regular practice. Everyone is aware. But now, when we enter into a forex, commodities, securities, derivatives, futures and options, okay, all these things you would require is some knowledge. Okay, so now you also require some handy experience. Without that, you may not understand. Okay, that is the reason I would suggest you people, please start from now onwards watching some business news, what is going on in the current situation. Okay, now let us jump into the what topics, what we are going to discuss. So we have already seen. So now, what are the business functions, or what are the activities which we are going to perform in treasury? Now, let us jump into this one. One more slide. Now you can see here. Now you can see here SAP, I mean S4 HANA Treasury and Risk Management Solution Map. We must have to understand from the bottom to top here. When I say the bottom line, the transaction manager. The transaction manager is an umbrella. Under that umbrella, all these things which we are going to perform, all these instruments, like money market, foreign exchange, derivatives, debt management, securities, trade finance, commodities, all this will be part of under transaction manager. That is the reason I mentioned the transaction manager is an umbrella. Under that umbrella, we have these sub modules. Now, what we are going to perform? You can see here, there are activities has been divided different different ways. The way of performing activities will be different. You can see here, one is a front office. Why the highlighter is not appearing? Okay. So now one is the front office, back office, accounting. These are the activities which we are going to perform in SAP Treasury. So now the activities in Treasury, SAP Treasury. Number one is let's say the front office. Let's say the back office. Then accounting. So these are the activities which they are going to perform, which even we will also see practically. These are the activities we are going to performing. But now what it does exactly? What is meant by front office? What is meant by back office? What is meant by accounting? Why the Treasury has been divided into the activities like this? There should be a reason behind that. Now, let's say now I'm working in XYZ organization. So now in that organization, let's say now I want to purchase a commodity. Now let's say the copper which I want to purchase. I am the person raising the, I am the person placing the order, buy order from the Treasury. Don't think about this is not related to the your purchase order. This is the order what I am talking about from the Treasury. Now I placed the purchase order. I placed the buy order, not purchase order, buy order from the Treasury. The instrument is let's say with help of the letter of credit, I have placed the order. Now the moment when I place the order, now the back office means, so now the contract validity period would be let's assume the contract validity is 6 months of the contract period. So until the 6 months period, because front office is a responsibility to create, as I mentioned, create orders, create orders or contracts, orders or contracts. Now, with that order, the back office should be perform the settlement or month-end revaluations or forex revaluations. The back office is going to the, I mean, settlement, netting. Okay, so there are different activities which back office is going to perform. Let's say the settlement of the contract, settlement of the contracts, or finally the accounting means the one person, because let's say I have placed the order by using front office functionality. Somebody is doing the settlement that contract. I am not the person doing, or I am not the person performing all the activities in all the ways. That is the reason we have the different kind of activities. So in front office, let's say I have placed the order. Then in back office, let's say the Krishna has been settled there in back office. He performed the settlement activity. Now let's say the accounting. Accounting might be performed some other person. Let's say the postings of the accounting documents into the accounting system. Whether I do required postings into accounting or not, that some other person will take a decision, some other person will perform activities in order to post the accounting entries. Then the next one is a rollovers. Rollovers is nothing but the contract. Let's assume today is the 23rd of December. We have entered into a forex contract. That contract which is going to end by end of December 31st. But now we would like to continue that contract, or we would like to extend that contract another 3 months. So there is a functionality called it as a rollover. We can extend the date in the contract. Then netting, where the payments will be happen. So the netting is a concept. Let's say from one counterparty, let's say the bank. Let us talk about the bank. From SBI, we also dealing business with them, forex business. We also dealing business from them, commodities purchases. So now let's assume there are two separate things are there here. One is a forex, another one is a commodity. Both transactions are which are related to the foreign exchange transactions. But ultimately, because of the both transactions, I have to make payment to the, let's say, to the sum of the amount to the SBI. So now while doing the payment, I can combine both the transactions related amount into one payment request, because one is a forex, another one is a commodity. I can combine into both the transactions into one payment request, then I'll do the payment. The netting is a concept where we are going to accommodating multiple payments into one payment, then we are doing the payment. I mean, different kind of payments, because for one payment for commodity commodity related transaction, one payment for forex, one payment for fixed deposit. I do not want to do such kind of payments. I want to compile all the payments into one payment request, then I want to do the payment. Then it can be possible. I mean, it's in one payment. I can combine into all together in one go. Then we can do such kind of activities also. Then Okay, first let us complete the front office activities. Then exercise the rights. Exercising the rights. Let's say the terminations. Now configuration letters. Now here is the accruals and deferrals. Accruals and deferrals. Then valuations. So these are the activities predominantly which we will see in every instrument. Any one activity, either it could be create the order or create the contract or settlement, netting, configure, letters, correspondence configuration, postings, reversals, accrual and deferrals, as well as valuations. We may see all these activities in Treasury, but all the activities, if you can ask me, can we perform all the activities for one instrument? Yes, if you want, you can perform, but nature of the transaction, nature of the situation, we will perform the activities. Which activity is relevant for that one? Then definitely we would require to perform that one. Now you can see here, now moving back to the slide. As I mentioned, these are the activities: front office, back office, accounting. Again, the activities we have seen the activities. See now, positioning and deal reporting, deal capture means deal creation or contract creation, exercise the rights, dealership, valuation tools, okay, online limit check, back office activities, standing instructions, correspondence monitor, netting, settlement, rate exchanges, corporate action process monitors. Then accounting, flexible accounting determination, accounting documents. Here is the accounting too many international accounting standards. Now we have seen about transaction manager. Let me show you in practical in the system so that we can understand. Now, in the configuration node of SPRO, you can see the financial supply chain management. Under this node, come to the treasury and risk management. Under treasury, you can see the transaction manager. As I mentioned, transaction manager is an umbrella. Under that transaction manager, now we can able to see money market, forex, securities, listed derivatives, O2C transactions, trade finance. The similar way, under money market, the money market has the different financial instruments, because each and every sub component or sub module, I would say the sub component has a different kind of instruments. Money market, which is dedicated to the either it could be a long-term borrowings or short-term, long-term, fixed term deposit. You can see here under money market, the money market instruments can be used for short-term borrowings or short-term loans purpose. You can see fixed term deposit, commercial papers, repo rates. Foreign exchange transactions, spot, forward, swap rates and options and futures. So the similar way it is applicable for all others also. So the moment when we will be there into the, either it could be implementation project or it could be a support project, we are keep on hearing the terms is a fixed term deposit, but you should understand the term fixed term deposit, it will be part of money market only. It will not considered for other project, other components. Foreign exchange, what is the spot rate, what is the forward, what is the swaps? So we need to understand this one, because each and every sub component has been dedicated to the some particular product types, because the derivatives will be falling under these are the products will be fall into the derivatives. Now debt management, you can see this bonds, bank loans, commercial papers. Securities will be your bonds, warrants, stocks. Then trade finance should be a letter of credit and bank guarantee. These trade finance earlier in ECC 6.0, we were calling as a commodities, but now, the trade finance, the moment when we are going to purchase, trade finance, because commodities, futures, forward trade, then swaps, O2C transactions. Now the under trade finance, because earlier the trade finance part was there in sales and distribution. In ECC 6.0, the trade finance, which was the part of material management and as well as the sales and distribution, because where the international transactions are happening as per the local government rules and regulations, we must have to enter into an agreement, or we must have to sell or buy the goods with help of the letter of credit or bank guarantee. Either of the one should be mandatory, either of the one for buying or for selling. Then, so the commodities, again, the commodities which is going to support, futures, forwards, this again for the trading, then swaps, O2C currency options, again, this will be part of the, earlier the commodities, there was a separate module was there in ECC 6 as a commodities. Now this has been overruled. Whatever the transactions which we are going to buy, then you either you can perform through trade finance, or either you can go with the some derivatives market. You can see here. You can see futures and options derivatives. Either you can buy or sell, whatever it may be. Now we have discussed about the transaction manager. Under transaction manager, what are the sub components are available? And also we also discussed about front office, back office and accounting. Okay, is that clear? Or any further queries? Hello, am I audible?
Yes, sir. Yes, you are audible.
Okay.
Yes.
Okay. Now this is the bottom what we have discussed. The transaction manager we have seen. Now moving to the exposure management. Now the concept, the exposure management as well as hedge management, these two are part of my hedge management. Now, under hedge management, we must have to perform. I mean, we have two things. One is the exposure management. So the term exposure, which is going to representing that the moment when we are going to enter into an agreement, we are exposing ourselves or we are dealing the business transactions with customers. We are exposing ourselves. What is the limit which we are having while placing the orders? So we are exposing ourselves. The exposure management, we will talk about more and more when we will be there into the hedge management. But now coming to the hedge accounting. So let's say now, which we want to mitigate the risk, the functionality of the hedge management is that which is going to mitigate the risk. The mitigation of the risk is nothing but how to handle the risk. Either it could be exchange rate risk or it could be a interest rate risk or it could be a commodity risk. How you are going to handle that risk? Because in the hedge accounting, which we are going to combine, again, it's either it could be a balance sheet risk or profit and loss account risk, P&L account risk. Again, there will be two options will be there. So if you are going to follow the P&L account, so which we need to accommodate all the transactions which are related to the P&L account, then we need to do the hedging for all those transactions. If it is related to the balance sheet hedging, then we need to combine all those transactions. Then we need to do the hedging which are related to the balance sheet. Now this we'll talk about more and more when we will be there into the hedge accounting. Now the risk analyzers, you can see here. Now the top node is the risk analyzers. So now risk analyzers, you can see one is the credit risk analyzer, market risk analyzer, portfolio risk analyzer. Okay, in our one thing I have missed here in the Excel sheet, I did not mention. Oh, okay, risk management already mentioned. Okay, fine. Now, okay. So now credit risk analyzer, what exactly which we are going to achieve with this function? Now let's say we have done the investment with the bank, let's say with the some XYZ bank. What is the financial position of that bank? Let's say the bank has gone bankruptcy. Now in 2015-16, even in 2019 or 20th period also, we have seen there were many banking crises in India. How the Punjab National Bank was happened. Let's say how the Yes Bank. So there were how the even ICICI Bank also. There were crises which were going on. In that situation, how we are going to monitor the risk of your counterparty? Counterparty is nothing but to whom we are dealing business. Means now if this is the case, the banks are the counterparties in our case. Like we have done the investment, either it could be a fixed deposits or it's a, let's say now we have some funds in our bank account, long-term funds. So now how we are going to monitor the risk of the counterparties. The credit risk analyzer will give the information. What is the risk factor of the counterparty? Now the risk analyzers, I mean the market risk analyzer. So the market risk analyzer, which will help us, let's say now with us we have the, let's say the 10 lakhs rupees of the excess funds. Now that money, the 10 lakhs rupees excess money, where we need to invest that money. Before going to do the investment, definitely we would require is some analysis. Means what would be the future situations? What is the current market price which is running? Whether, let's say now we want to invest in some shares. Let's assume what is the current price of that particular share, whether it is running high rate in the market or it's a overvaluated or it's undervaluated. The price is running is I mean, as per the, I mean, whether we can go and we can do the investment right now, or there could be any chances the price may go up, may go down. For all these things, if we would like to do the analysis with the help of the market risk analyzer, we can achieve that we can achieve that one, because it will give some information before going to do the investment. Based on that risk factors, we will take a decision in which instrument will be doing the investment. This is the about market risk analyzer. It's a reporting only. I would say that these are the reporting tools. Now coming to the portfolio analyzer. Portfolio analyzer is a nothing but a, let's say now I have some instruments from money market, some instruments from forex, some instruments from derivatives, some instruments from commodities, some instruments from securities, which I have already either invested or borrowed. But now definitely I would like to monitor the current positions of the portfolios, because suddenly the market may fall. Okay, we have seen practically during the pandemic situation, the markets were falling and falling every day. It's, I mean, 500 points, 600 points, 2000 points, every day it was falling. That was unexpected situation. So in that situation, whether we need to continue that position, or whether we need to go for some adjustments, or whether we need to exit the position from that point of time. So based on the portfolio analyzer analysis, the management will take a decision. Should we keep that position? Should we exit that position? It's a depends on the market situation. They will take a decision. So these are the few glance about the treasury and risk management. But we are going to see, first we are going to start from bottom. We are going to start from bottom. From money market, we are going to start. Once this will be completed, the sequence will be money market, forex, derivatives, then securities, I mean debt management, trade finance, and commodities. Commodities, anyhow, it will be part of derivatives only. But now we will discuss about in detail one by one. Okay, so until now what we have discussed, is that clear for all? Is that clear?
Yes, sir.
Okay, fine. Now Now let us discuss about the few things here. Product type. So what is mean by product type? You are going to keep on hearing product type. In SAP terminology, we should not call it as a, we should not call it as a shares. We should not call it as a bonds. We should call them as a products, product types. Okay, see, the terminology is a very, very important one. Okay, whenever you are present for interview, you must have to use the SAP terminology. Okay, so please take a note this one. Okay, if you are not using the terminology of the treasury, then they may think in a different way. So that is the reason you must have to use the SAP treasury related terminologies. So you need to familiar going forward. You will be become familiar all these terminologies. Now let us talk about the product type. So what is mean by product type? So now the moment when we have decided that. Now let's assume, before going to talk about the product type, with help of the cash and liquidity management, what we have seen, whether we have sufficient funds in our bank accounts in order to do the vendor payments, or it's a loan repayments or interest repayments, or else to run the day-to-day business operations. That is a one aspect. By seeing that one, let's assume the cash manager has been found. So now there is a excess cash which is there in the organization accounts. Now the cash manager immediately will inform to treasury, will inform to treasury department. Now these are the excess funds which we are having at this moment. You can utilize them for some investments purpose. However, the investments will be, the treasury department will decide them. But now as soon as once the treasury department will receive the intimation from cash manager, the treasury department will discuss with the accounts payable team, once again with the management people, how much funds should be required in order to run the business organization, let's say for 1 year of the time. Over 1 year, what would be the funds requirement? So now accept that if there is any still excess amount, if they find any excess amount, then they will take a decision. Now let's assume in our organization, the cash manager, let's say the cash manager found there is a excess cash. Let's assume is a 10 million. Now, so what will happen when I mentioned is a excess cash, means it is not at all related to the your borrowed money. Even it is not at all related to the reserves and surpluses. It is the excess cash, means where the cash does not required for your future operations. Either it could be a future, means either it could be for over a period, 6 months period, or 1 year, 2 years, 3 years. Depends on the current situation. Then the cash the money which does not required over a period of time. Now, let's say the cash manager, he found that, let's say that 10 million is a excess cash. Now, immediately the Treasury Department will take a decision. To invest the, let's assume, to invest the money. Now, in order to do the investment, now this will come into picture. Market risk analyzer will come into picture. Because in which instrument, if we do the investment, then what would be the expected return? It is only the just expected the return. It's not, they are not saying that this much we want. No, absolutely not possible. Because that is the reason whenever you are doing some investment, even mutual funds also, they are always mentioning the word, the risk will be involved. It's a subject to market risk or market volatility. They are always mentioning this word. The reason being that the excess cash, we found that, but we want to do the investment. Then now immediately what they will do, let's say there will be a different scenarios. So then based on the market analyzer, risk analyzer, they found that, let's assume fixed term deposit. One example, let's assume finally the management has been decided that, or the Treasury Department has been decided that they want to invest the money into fixed term deposit. But why they have chosen this one? There should be some reason, right? There should be some reason. But now my organization expectation, see the management expectation. The management expectation would be, let's assume number one is on the investment, they are expecting interest rate, let's say the 12% they are expecting. Now, second thing is that they do not want to take much risk on investments. Then when I mentioned the term word is a risk, because the money, when we are going to do the investment into the fixed deposit, then we will be safe. Now you can see here, means 99.9% the return will be as per expectation. Because I'm not taking much risk. I do not want to take much risk. Only my expectation would be a decent return. It should be 12% should be sufficient for me. In this case, they are not expecting much risk. I mean, they are not taking much risk. Then also, they are also thinking that my investments are secure. Means most of the cases, the fixed deposits will be done with the financial institutions like with the banks. So we never ever seen, I mean, at least we will get the return, whatever we have invested. But now that is the risk-free investment. Let's say some organizations is thinking that definitely I will take a risk, but now I'm expecting the return is a 30%. Now let's say the same example. Let us talk about the same example. Here is the less risk. Now in the investment side, it will be a risk and reward, always will be there. If you take much risk, then reward will be like that, because either it could be a gain or loss, whatever it may be. Ultimately, either it could be a gain or loss, that is a secondary. But now risk reward will be there. Now let's say the high risk. Now the organization expectation would be on the investment, they are expecting the return on their investment. Let's say they are expecting the return is let's say the 30%. 30%. Even some people may expect 40%, 50%. But in general, in regular scenario, the returns will be matched with the inflation rate. The decent return would be we can expect 12 to 14%. Even mutual funds also, equities, whatever it may be. 12% is the decent investment. I mean the return on the investment. But now here we are expecting that we want to return is a 30%. But now in order to get the 30% of the return on our investments, what are the measurements we are going to take? Then in which instrument do I need to invest? Either if I invest into the mutual funds, how much return they are going to give? If I invest into the equities, how much return I may expect? If I invest the same amount into the some commodities, how much return I can expect? So there are different criteria are there. So now based on that we can take a decision. Now you can see here. So this is one of the website in India, Money Control, where you can monitor your. Now you can see here. Now let's say some are the news. I think this is a COVID news scene. COVID news. Now you can see somewhere. Now you can see it will have impact. Government extend the import duty exceptions on the measure deal by 1 year to March 25th. Okay, so we must have to read such kind of news. Definitely you can see here. Somewhere you can see here. Okay. Okay, you can see here. You can watch this website so that it will give some fruitful information. Okay, even we can expect now. Predominantly, we can watch here. You can see here what is the commodity rate which is running at this moment. Gold rate. What is the gold rate today? What is the silver commodities part? Where you can see the commodity section. At the same time, you can also watch the currencies. At the same time, you can also watch the bonds. If the bond yields will get increased, definitely it will have impact on our interest rates. I mean, these are not bonds. These are also the shares. Okay, don't confuse that one. Now, you can watch here. Okay, who is going to the, I mean, this is a one of the website where you can monitor regularly. Now, so now in which instrument we are doing the investment? If we are expecting the return is a more and more, whether it's a money market instrument or foreign exchange or derivatives or debt management, which instrument which we are going to choose in order to get those returns? Either it could be a positive direction or either it could be a negative direction. But the organizations in a position to manage that risk, because now today we have invested in one share, let's assume that is 100 rupees. After over a 1 year period, from 100 rupees that has gone 70 rupees, because we will be running as a losses. 30 rupees is the losses. On one share, we are losing 30 rupees, means you can imagine the organizations will do the investments lakhs of millions of rupees. So how you can handle that risk? So the experts will be there, so they will keep on monitoring that risks. Okay, that's fine. Now, now let us start with the fixed term deposit. So now money market, because it's a low risk investment, which our management is looking into the low risk. They do not want to take the decision, or they do not want to go with the high risk. So what is the options? What are the options in treasury we are having in order to invest with low risk? The options are the instruments, money market instruments. We have fixed term deposit, commercial paper, repos. These are the instruments what we are having. It's a less risk instruments. So by using this, we can achieve, or we can do the investment. Now, let us start with the money market. Money market. So money market is a part of treasury and risk management. So under money market, what we are going to discuss? Now under money market, we are going to discuss about the fixed term deposit, deposit at notice, variable interest rate instruments, then the next one is a facility, which we are going to discuss in the money market. These are the instruments what we are going to discuss. We know about fixed term deposit, but there is a difference between fixed term deposit and deposit and notice. Then variable interest rate instruments. So the interest rates are not fixed. It will be vary. Either it could be depends on the period or depends on the days, whatever it may be. We'll see that one. Then the functionality of the facility. Again, the facility which we may see two kind of facilities. One is a syndicate facility, another one is a bilateral facility. So the concept of facility is that which we are going to utilize the credit, the limit what the financial institutions are going to offer. Let's say the overdraft facility. The bank has been offered is a OD limit for us. Now, how much we have utilized from that one? Okay, based on that, we must have to repay that interest. Okay, it's a depends on the scenario which we are going to see. But now, for what purpose the money market can be used? This can be used. This can be used for, means the money market can be used for, remember, short-term borrowings and short-term investments. For this purpose, the money market instruments can be used for this purpose only. Fixed term, I mean, either it could be short term. Okay, short term borrowings and the short term investments. For this purpose, we can use the money market instruments. Now let us talk about instrument. Instrument is nothing but a financial instrument where we are going to choose a particular product. Okay, so now let us talk about the fixed term deposit. A fixed term deposit is an instrument where we are doing business with that particular product. Either it could be a borrowing, either it could be a investment, whatever it may be. But a financial instrument which represent that can be used to deal the business for investment or borrowing purpose. Now there are different kind of instruments are there. But now in regular terms, we would say instruments, financial, I mean, fixed term deposit is a one instrument. Deposited notice is an instrument. Variable interest rate is an instrument. Even facility also is an instrument. But now in SAP terminology, we are going to say is a product type. So for each and every instrument in Treasury, we have a separate, or we have a different product types which are there. So now the product types, the SAP has given, there are standard product types what SAP has given. But I would say, even I am requesting you people also, please do not use any standard product type for your practice purpose. Please take a note. I will mention something once this will be completed, because what things you need to follow in order to expedite your skill, or you need to understand. Okay, you need to you need to understand, quick understanding purpose, what you have to do. I will key some points. I will give some instructions. You must have to follow. Then, now in the money market, as I mentioned, we are going to learn all these things. Now, so in order to make comfortable yourself, what you need to do? The first, a learner, okay, I'll put it. They have to follow. They must, not they must follow the guidelines to make them comfortable in Treasury. Okay. A learner or student, they must follow the below guidelines in order to make them comfortable. Then number 1, as I mentioned, we must follow, you must follow the business news. Business news, either it could be a Economic Times, or I would say the Money Control. Money Control websites. Money Control websites you must follow. Then second thing is that you need to use the SAP Treasury terminology. You need to become familiar with the SAP Treasury terminology. Then third thing, the very important thing is that do not use any standard SAP delivered product types for your for your practice. During practice, or okay, don't use your second. Where is it? Okay. Do not use any standard SAP delivered product type for your practice, because you must have to create the new product type. Then only you can understand what is the business function, what is the reason behind that, why we are performing this activity, what is the reason behind that. You must need to understand each and everything, otherwise definitely it will get you will get confused. Okay, you must have to follow this one. And also no need to refer any books and articles, because I will give the clear information. Okay, I'll give the clear information what to learn, what not. So then just follow the instruction. Then the practice should be a do the regular practice. Do the regular practice, because what will happen, as I mentioned even in the beginning also, it is not that much easy to understand until and unless if you do the practice multiple times, then only you can understand it. Otherwise definitely you will get confused. Okay, that is the reason I'm requesting you people, please start the practice as much as possible. Now that let us start with the quick glance of Treasury. What we are going to see. What we need to become familiar. Number 1 is a product type. product type, then transaction type, flow type, then derived flows. Again, I mean the flows are the flow types are derived. I mean divided into the two things. One is the, I'll put it here, main flow. Another one is the derived flow. Main flows and derived flows will be there. Then the next one is the update type. Update types. What is the update types which we are going to use? Then general valuation. General valuation class. Then the next one is a account assignment reference. Then account determination. Account determination. The next one would be a position management procedures. So in order to understand the flow, definitely I will show you the flow. Then before going to understand or before going to start any treasury related module, first we need to become familiar ourselves with this glance. So one is let us see the product type. So the product type is a financial instrument. Second one, let me stop the screen. One moment. I have a documentation. I will present that one. One moment. Okay, got it. Now, let me represent this one. Now you can see here, what is the product type? A product type, the product type classifies a financial instrument in SAP Treasury and risk management. Differentiations is necessary as a individual instruments are subject to different processing rules and are to create different levels for reporting. So what the term, what it is going to represent that, see, the product type is a classify the financial instrument. Means in money market, I have a different product types like a fixed term deposit, commercial papers, facility, spot rate. I mean in forex, spot, forward. So securities, derivatives. So the product type which is going to differentiating the either it should be investments or borrowings. Classifying the financial instrument. So the product type which is related to what, whether it's a fixed term deposit, money market related, or it's a security related, or derivatives related, what kind of a product is that? It is going to classify the products, classify the instruments. Now the transaction types. The transaction types means the moment we are having two types of transaction types. I mean, there are different. One is a, now if you can see here, transaction types are defined with respect to the product type and subdivided the product types by type of transaction types. So, for example, the transaction types for a product type representing a bond may be buy or sell. So meaning that if we would like to do the investment, then we have to place the buy order. If we wanted to sell, then we wanted to place the sell order. Either it could be order or it could be a contract. So we have different kind of transactions. Transaction type 100 is the standard product type for buy order. 200 is the transaction type for sell order. The similar way, this buy and sell we can use, and for derivatives we can use 400 is the transaction type for buy. For derivatives, I'll put the, here is the, these 100 and 200 we can use for money market. I mean, securities also we can use. Even trade finance also we can use. But now for derivatives, the transaction types are as follow. 400 which we will use is a buy. Let's see, let's confirm once again. Trade finance rate, listed derivatives. Basic settings, master data transaction. Let's see here. I remember that one, 400, it is the 400 and 500 only, exactly. So the transaction type 400 and 500. 500 is the sell. Now, these are the transaction types which are associated with the product type because they are all interlinked, interconnectivity between the product type. Now, flow type. What is the flow type? Because now I have created the deal, but now on behalf, let's say now we have done the investment with the bank, let's say a fixed deposit, 10 lakhs rupees. That investment related information we have to show in our books of accounts. Because in order to flow the entries, accounting entries, the flow types has to be defined. The flow types has to be defined. The flow types are interconnected between the transaction type and product type, condition type. Then we must have to define the flow types. Then, I mean, flow types, based on the flow type, whether we would like to post the accounting entries or not, the flows will be decided. You can see here. Now flow type, I mean, derived flows are, I will come to later. Flow type. First, this we need to discuss about the flow types. Then we need to come to the derived flows. Now, flow types. Flow types define the flows of the trade. For example, Forex forward contract has to buy currency said is a buy flow type, and the sell currency should be a sell flow type. Means the flow type which is representing that either it's a currency is a income inflow or outflow. Then derived flows. Derived flows are dependent on the main flows. Let's say now there is a some charges, some tax amount which I want to charge 100 rupees on that particular transaction. Or let's say now I want to charge some additional charges on that particular transaction. We must have to use the derived flows functionality in order to calculate the or taxes, or in order to apply the some additional charges. Again, the derived flows can be percentage based, can be amount based. It depends on the your requirement, which one is feasible, then we can go with that option, which option is feasible. Now coming to the condition types. A condition types control how the flow calculated by the system. The simple example, we have done the fixed investment. Let's assume fixed deposit. We did the fixed deposit, the amount. But now on that fixed deposit, the expected return would be a interest on the investment. That return would be a interest, the appreciation. So now in order to calculate that interest, then we must have to apply the condition types during our configuration. The respective condition will be calculated, either it could be interest, you can see here, interest, dividends, repayments, or some additional charges. Depends on the condition type, the system will act and will calculate them. Now coming to the, see now also I mentioned here, the condition type of controls how flows calculated by the system are handled, such as interest, dividend, repayments, and charges. Condition types automatically generate flows which are the basis for further processing in FI and cash management, as well as the analysis in the market risk management. The important thing here is that there is a 1:1 relationship between condition type and flow types. Because if I map the flow type, for one main flow type, I can map derived flow. But now flow type will be associated with the condition type. Condition types are condition types, it should be a 1:1 relation. It can be used for depends on the, again, the condition type can be mapped for nature of the product type only. If you ask me, the condition type will be applicable for all these instruments? Absolutely not. That is the reason I mentioned the condition type which we are going to apply nature of the product. The condition does not applicable for my equities as well as my derivatives. Okay, so depends on the nature of the product. Then update types. Update types. Okay, we have already seen the update. Okay, sorry, flow types, right? Update types. Update types control the posting of individual flow. Means where I want to update my accounting transactions into my finance system or finance module. The update types identify the flows in position management and controls the flow to the operative and parallel valuation areas. Each update type has a direction associated with it. Okay, so now how the updates are being updated into the system. Now the defined update types and usage. Okay, update types can be defined based on the defined flows types, which represent the cash flow structure of the transaction. Means whether it is an inflow or whether it is an outflow, the cash inflow, cash outflow, how the system is going to act. Now, what we have discussed, you can see here, front office, back office, we have already discussed a few other things. Now, in coming session, I will show how all these to be interlinked, because the flow, what we need to understand, how the flow type, how the product type, how the transaction type, how those are interconnected between in order to perform the entire cycle, then how those are interlinked. Then the flow I will explain once again in the upcoming session. So okay, so far what we have discussed, the terminology of the treasury, is it clear for all of you or still any further query? So please let me know. Hello.
Yes, sir. Terminal is fine, but we have to go through that.
Okay. Okay. So if any queries, so please let me know. Fine. Now, now let us start with the. So there are few basic configuration settings to be required in order to, because in finance and controlling module, in order to start with the basic things, like if we want to post some GL transactions, then we would require some basic setup. So in treasury also, in order to perform, the treasury activities, definitely we would require is some basic configuration is to be required. What are the configuration steps needed? Then basic configuration for treasury. So what is to be done? What configuration steps is to be done? Then the first one is a activate treasury business function. Activate treasury business function. Then so now define business partners. See, now treasury business partners are differ as compared with your customer vendor BPs. Okay, so that we will, because we either you can use the same, but now the roles, the moment when we are going to associate the roles, may not be applicable. Okay, but again, I'm not saying that for all treasury business partners does not require the vendor customer role. Absolutely not. But in trade finance, definitely we would require a role is a customer role is to be required. It must and should be assigned over there. Okay, that we will discuss now. So but the flow, what are the minimum configuration steps are required? Then define number ranges for BPs because this we have already done. We have already created, or we have already number ranges. This setup is already there when we did FI configuration. Okay. Define then define accounting principles. Define accounting principles. Then assign accounting principles to ledger. Because from these steps, whatever I am going to describe here, from these steps, there are few setup which we already did during the FI configuration. But because whoever is going to start from now, you need to just cross check whether this setup which already done. If it is already done, you just ignore that one. If it is not there, then you can do the required setup over there. Then now the sixth one, what we have seen, assign accounting principles to ledger. Then define, one second, let me do, okay, security, define security. Okay. Why don't we use that existing one, right? See, one second. Let me copy this all together. Because which configure, define and assign security is this one. Okay. It's already done. Activate treasury functions. Yeah, this already there. Because again, why we need to can utilize this, right? Then okay, which is already combined. Okay, define security. Okay, define security price types, define calculation. Let me copy from here because we have to adjust again. Okay. Yes, here. Remove altogether. I'll adjust. Okay. So now these are the configuration steps which are to be required. Okay. So now what I will do, I will start all these configuration steps in next session, in tomorrow's session. But before going to wind up the session today, so I just want to know, is anyone is having any issues about the previous sessions? I mean, about the cash and liquidity management, because I think Venkat was approached, Venkat as someone was approached me I mean, he had some issue while uploading the bank statement, current day EBS statement. The system was unable to create the memo records. But the way of
Yes, sir. I was the
what the
approach.
process,
Yeah.
what he had followed, I think that was due to some, I mean, the selection criteria in FF_5 was wrong. So that could be the reason system did not created the memo records. But now, as I have communicated to him, now that is already the memo records are creating successfully. Even I have given the, let me show in front of you all. So let's see. SC, I mean, okay, SC16N. Let's see the FDES table. I think his company code, his company code is RONY. So this is his company code. You can see here these many memo records. I think he had created again. Again, did you try, right? Again, you have tried.
Yeah, yes, I tried it, sir. And
Yeah,
one
I
more
think
thing, yes. The 22 date will be going to get absolute, sir. We are going to upload 23 statement, current day statement.
yes, this should be archived, right? But where you have uploaded 20, I could see only the 22nd of December, right? You can see.
No, but the planning date has been changed. You can say that, sir.
No, no, I could see only that here is a 22nd. 22nd of December only I could see here. See,
Date is
the
created
date.
on 22nd. The planning date is changed, sir, 22 to 23 for some of them.
No, I only used only the 22nd only, but I see planning date here. Okay, here, right? You were talking. Oh, okay, got it. Okay, here
22nd
the
has to get
planning type
absolute.
you have changed this, but how did you do the mapping? Let us see now. 1 second. There might be a configuration. Now, financial supply chain management. Let us see here how you, sorry, cash and liquidity management, right? Cash management, memo records, define planning types. Now, okay, what is your planning type? YL, right? YL, you have already selected this one. YL. Okay, YL. Okay. So one thing I could see, Hans, here, wherever you have used the planning type YL, all the memo records which the planning type YL has been created on 23rd. Okay.
Okay.
So now none of the planning level has been created, either it is a previous day or next day, because if you try to change the date to 24th of December, then upload the same file, then make it the planning date is a 24th, then you can see. So these are the memo records will be archived. The status, it will get updated here, because you see the planning type should have the next day. That is the condition as we have seen. Then none of the record has been updated. Even YM also the same. You can see only this planning type which has been updated, which has been uploaded only for 23rd of December. If you upload for planning type YL and YM with the 24th of December, and you can observe this one. I'm sure because you have already mapped YL and YM. Both are selected auto expiry, means the moment when you have selected this one, these will get archived. You can notice once you upload the next file.
Okay.
And
one more thing, sir. Actually, I upload after you are uploading the current day EBS statement. I uploaded this once again with other numbers. What happened means there is a duplicate of line items which are getting reflected here. Actually, on the day you told that it is going to update the line item which is there with the VI number say. but it is getting duplicated here. How we need to proceed here without
No.
getting the duplicate?
No.
Yeah.
See, in that file, I have seen one thing. Because the file in that file, yesterday I was just watching here. I just observed here one thing you can see. This is your file, right?
Yes.
But as I also mentioned, the timing should be always equal. Why the time is differ here? Record number 1 and record number 2. The first thing is that the file timing should be same. Let's say you have received the second file. In the second file, this now, let's say now I have received morning 10 a.m. this file. Now the second file, as I mentioned, if these whatever the existing records should not create any memory records, only the delta record should get create memory records, right? If that is the case, this time always you need to change it. Let's assume 11 o'clock. Then you can try this one. You can change the time and upload this file. Then whatever the existing records, for those existing records, system will not create any memo records if the file has the same information. In case if there are any changes, there are any additions, for those line items, for those records only, the system will create a new memo record. This is a depends on the timestamp here. You need to monitor closely this one.
Okay. Actually, I updated only the second line item date that time. First line, this one time is not updated. So maybe that is the reason.
As I mentioned, for all, always the current day statement, the timings should be same. Line record number 1, record number 2. The timings always it should be the same. Then only the system will treat that this is the file is related to the current day. Okay. Because for prior day, again, this date will be a previous date. I mean, time will be the same. Time and date also. You can take a note. You can see here, this date also, it should be equal. For prior day, how it will be? Let's say this will be the 21. This will be the 22. Date and timestamp of both should have the same. Okay. Again, you can take a note this one also.
And one more thing, sir. Prior day, you have given any example considering statement like this?
Yes, I have given, right? Yeah,
okay.
there are statements already there are in Drive. You can check, Hans.
Oh, okay. Actually, my name is Ravi Kumar, sir.
Oh, Ravi, sorry. Yeah, Ravi. Yeah, see, Ravi, I have already placed, okay, whatever we are having. Okay, there are multiple files which I have placed in the Drive, Ravi.
Okay. Surely we'll go through that and we'll get back to you, sir, if you're having any doubt.
Okay.
Yeah.
So in case if anything, you can take a note and you can come back to me so that we'll discuss in tomorrow's session.
Sure. Yeah.
Okay. I think one more, I think somebody has also sent that message stating that the business partner, they are not able to create. Who is that?
I am only, sir.
Okay.
On that day that got resolved. Yeah. I am able to get it.
Okay. Because there is some mapping missing, right? I said because I did not have time on that day to see that one. If you have that issue, so please let me know so that I will have a look at it, then we can resolve that one. Okay. Yeah. Okay. Yeah. See you tomorrow. Then we'll continue the session by tomorrow. Okay. Yeah. Thank you. See you tomorrow.
Thank you.